Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Bitcoin's daily relative strength index has plummeted to 15.1. This metric signals extreme oversold conditions, mirroring critical bottoming formations seen in 2020 and February 2026. Technical analysts are now eyeing the $60,000 support level as the decisive line in the sand. If this floor holds, the probability of a rebound towards $70,000 surges significantly. Michael Saylor has reinforced this bullish thesis, reaffirming Bitcoin as the premier long-term asset despite the current volatility. With BTC trading at $60,674, sentiment is shifting from panic to strategic accumulation among institutional holders. Meanwhile, equity markets are grappling with severe geopolitical headwinds. We are now 100 days into the US-Iran conflict. Public support for the war has collapsed, triggering a risk-off environment that has dragged the S&P 500 down by 2.6%. The convergence of geopolitical risk and weakening economic data is capping any potential upside. This macro instability is further complicated by earnings season. Oracle shares dropped 9.6% in pre-market trading, suggesting that tech rallies may be heavily capped. Broader market weakness indicates that individual corporate results are struggling to stabilize the index against these macro headwinds. In Asia, the narrative is mixed but driven by semiconductor giants. Samsung and SK Hynix are propelling South Korean markets higher, offering a rare bright spot in a gloomy global landscape. However, analysts are issuing stark warnings. They predict a potential 15% correction in Korean equities if interest rates rise further. The rally is fragile, dependent on the hope that rate hikes are peaking rather than accelerating. Looking ahead to today's release, the absence of major high-impact economic calendar events leaves markets directionless. Without fresh data to guide central bank expectations, traders are relying entirely on technical levels and geopolitical developments. The lack of a catalyst means volatility will likely remain elevated as participants wait for the next macro shock. The interplay between crypto's technical oversold signals and equities' geopolitical discounting creates a complex trading environment. Bitcoin's potential move to $70,000 contrasts sharply with the S&P 500's 2.6% decline. Investors must navigate these diverging trends carefully. The key support at $60,000 for Bitcoin and the 15% correction risk for Korean stocks are the two critical levels to watch. If rates do not rise, the semiconductor rally might sustain. If they do, the correction could be swift. That's your market briefing. Follow Rumour With AI for daily market intelligence.